Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going then with all the stocks that have been buzzing in trade on the back of news flows and technicals. And on the technicals now, we have Arpit Beriwal joining in with us from Motilal Oswal Financial Services. Arpit, very good afternoon. The first stock that we've picked out for us is a very interesting one, MCX, right? We've seen that up move continue for MCX in the last 1 year. From 1,500 today, trading at 4,600. Already seen such a strong up move. So is it time that one should start booking profits? Because today also actually the stock is up 6%. What's the word on technicals?
Yeah, so very good afternoon everyone. If you talk about overall the exchanges space, so exchanges space has been on a quite strong uptrend in last couple of weeks. And within that, MCX is a top pick within the FNO space also if we see. So technically if we see, the bigger time frame chart on monthly is strong. The structure of higher highs, higher lows is intact on monthly frame. On the weekly frame, if we see, it has given a fresh consolidation breakout above 4450 zones. So from past almost 7 to 8 weeks, it was consolidating between 4200 to 4450 levels, and there was some sideways momentum. But after this market correction also, the stock was holding its gaze, and today we have seen a fresh breakout above 4450 levels with good surge in volumes, strong bullish candle, and trading a lifetime high. So looking from a positional perspective, we are quite bullish on this counter for an upside move towards 4850, 5000 plus levels. However, if someone has bought near 4400 levels, some can book partial profits at current levels and keeping stop loss of 4450 for an upside move towards 4850, 5000 zones.
Alright, so positive view coming in on MCX, but book partial profits is the call coming in from Arpit. Thanks for that. Let's move on, talk about a big loser in today's trade, and that is Max India, locked in lower circuit, 5% lower, and this is on the back of a very weak set of Q1 numbers coming by. Revenue has come in at 26 crore rupees compared to 41 crores, which is down 35% year on year. Net loss has also in fact widened, this time coming around at 27 crores versus a net loss of 12 crores last year. EBITDA loss has also widened, coming in at 28 versus 12. So, lots to watch out for when it comes to this stock, because we also have another reason why the stock is in focus. They've approved the proposal of fundraising up to an amount of 250 crore rupees. So, earnings as well as fundraisings, two reasons why the stock is in focus. But well, yes, a locked in lower circuit on the back of very weak Q1 numbers coming back.
Okay, let's move on and talk about Glenmark Pharma. Then we have this stock in focus on the back of its earnings as well as some of the highlights also that came in from the con call and management commentary. Overall, good set of numbers that came in from the company. Operationally strong set of numbers. Growth of 7% in terms of revenue. Profits of the company seeing 9 times growth as well. 37 crores last year versus around a 340 crore. There was a one-off last time, but yes, still a very good strong growth even in terms of the margins of the company. 18.1% versus 14.4% last year. What we're talking also is that in the con call, the management also highlighted that, in the second half of the year, they're expecting a better recovery coming in from the US markets, and they expect even Europe market to continue to do well. So we could expect this, good momentum maybe to continue for the company, and improvement in terms of US business is something that will be working out well. So surely going to be keeping an eye out on Glenmark Pharma, as of now holding on to gains of 5%.
Alright, so Glenmark Pharma up 5% today, but Arpit, when you take a look at Glenmark Pharma on the charts, you also picked out that stock for us. Last 1 year, the stock price has almost doubled. Now, while the management is sounding bullish, do you believe on the charts this momentum could continue? Because last 1 year almost doubled, so are you penciling in any kind of slowdown, or do you think this momentum will sustain?
So if you talk about pharma as a space, pharma sector has been the biggest outperformer in last 3 to 6 months. And we have been quite bullish as a whole on the pharma index. If we talk about Glenmark, it's one of the big outperformers within the pharma space also. So technically also, as rightly said, the stock has almost doubled up in last 1 year itself. But looking at the technical also, monthly time frame, the structure of higher highs, higher lows is intact. On weekly scale also, the base of the stock is shifting higher from 1200 to 1300, from 1300 to 1450, and now it's trading at life highs. So all in all, looking from the chart specific also, today it has given a fresh range breakout above 1480, 1500 levels, and pharma has been the flavor sector from past couple of months. So looking at the setup wise, the risk reward immediately it's not favorable, but the trend is still strong. So one can buy at current levels also, or a minor dip near 1520, 1530 levels, with keeping stop loss of 1450 for an upside move towards 1650, 1700 zones.
That is Glenmark Pharma. But let's just take a quick look at Nifty, 24,500. It's back to that level. Considerable recovery from the day's lowest point, 1.5% uptick for the Nifty 50, keeping an eye out on that. IT continues to see a very strong up move, up 2%, 2.6% as well, top sectoral gainer. But on that note, we'll slip into a very short break. Keep looking at where the market is headed, as well as which other stocks buzzing in trade.
Hi there, welcome back. Still watching Market Fatafat on ET now. Let's keep it going with all the big buzzers today on the back of fundamentals as well as technicals. And Arpit, take us through Dixon Tech. You've picked up that stock on the technicals for us. Last 6 months itself, the stock has doubled. Do you think this momentum, this rally in the stock price is sustainable, or time now for some slowdown for this stock?
Yeah, so talking about Dixon Tech, if we see, it has been a huge outperformer within the mid-cap space. And if you see the chart also across all time frame, whether it's the monthly time frame, whether it's the weekly time frame, the trend of the stock is quite strong. From past almost 2.5 months, it was trading in a broader range between 10,500 to 13,000 levels. In the last couple of weeks also, it had bounced up from 50 DEMA, taking perfect support near around 11,500, and slowly gradually the stock is moving again higher. So if we see that overall setup wise also on the technical front, the structure of the stock is quite strong. And slowly, steadily, we can expect another rally above 13,200 levels also. So looking at the overall chart setup also, the trend of the stock is quite strong. One can go long at current levels or minor dip in between 12,200 to 12,300 zones, with keeping stop loss of 11,800 for an upside move towards 13,000, 13,200.
Out on those levels for Dixon Tech. Let's move on to the next stock. And Jinay, you picked out Entero Healthcare. This one is an earnings candidate.
Well, yes, it's an earnings candidate. If you look at revenue, it grew by 22%, coming at 1,097 crores versus 900 crores year-on-year basis, whereas the net profit jumped about 3 times, coming in at 20 crores versus 6 crores year-on-year basis. Also, EBITDA grew about 18%, coming in at 30 crores, and the margins remained flat at 2.8% year-on-year basis. The management highlighted that the earnings was mainly driven by procurement, efficiencies, and better product mix. Also, they have reaffirmed their guidance for FY 2025 with a growth guidance, a revenue growth guidance of 35 to 40%, as well as with margins expansion. If you look at the stock right now, it's trading with the gains of about 0.5%.
Alright, so that's Entero Health. And Arpit, you've picked out Siemens. This is yet another stock that in the last 1 year has doubled in price. So you've picked out all the big buzzers for us today. Tell us, time for any slowdown? Are you penciling in some cool off, or do you think this price action that we've seen on the stock will continue?
Yeah, so talking about capital space was in strong uptrend almost for a year or so. But from past 2 to 3 weeks, so almost 2 to 3 months, it was some momentum was missing out. However, if we see from past post 3 months time consolidation, Siemens has formed a strong base near 6,800 levels. And on daily scale also, it has given a double bottom confirmation and a price breakout above 7,100 by surpassing its 50 DEMA. So that clearly indicates that capital space is again back in action, and risk reward is quite favorable because the stock is turning from its support zone. So slowly, steadily, we can expect a good 5 to 7% rally in this stock in coming sessions. So Siemens would be a preferred pick within the capital space. One can go long in between 7,150 to 7,200 zones, with keeping stop loss of 6,850 for an upside move towards 7,350 then 7,500 levels.
Long call coming in on Siemens from Arpit. Let's move on, talk about Sai Silks, or Kala Mandir as the stock is known as, and why the stock is tanking away in today's trade. As of now, also 3% low. This is on the back of a weak set of Q1 numbers coming in. Revenue has come in at 267 crore rupees versus 305 crores, which is a downtick of 12.3%. Net profit also has shrunk quite significantly, coming in at just 2 crores compared to 17 crores this time last year. So that's a drop of 88% coming in. EBITDA also at 19 crores versus 45 crores, down 58%. You have EBITDA margins also that have actually shrunk quite a lot at 7.1% versus 14.6%. So in fact, they've actually become half is where the EBITDA margin is. That's on the back of a weak set of Q1 numbers coming in. Sai Silks down 3% almost as we speak.
Okay, let's move on to the next stock. Arpit, on the technicals, you picked out Balrampur Chini Mills. Are you expecting more of a run-up, more of a sweetness in this stock? Last 6 months, 40% return. Now what should we see?
Yeah. So talking about sugar space, Balrampur Chini, if you see, we have seen decent returns in recent past. However, if you look at the monthly chart structure, so it made a top around 495, 500 levels in the year 2022, and post that the overall nature of the stock was sideways. However, if we see from last couple of weeks, we have seen a strong breakout above 480, 85 zones, and it has given a cup and handle breakout. That's a positive price pattern, technical pattern, that clearly indicates that this rally is likely to extend gains towards more 10 to 15% from current levels also. On weekly scale also, it is given a range breakout of 490 levels, and the good part is that it is holding at higher zones. So looking at the overall chart setup wise also, we have been quite bullish on this counter. It has come out of a fresh range breakout about 490 levels, and good rally can be seen towards 550 zones. So Balrampur Chini would be a preferred pick. One can go long at current levels or minor dip in between 5110 to 5112 levels, with keeping stop loss of 485 for an upside move towards 555.
Okay, that's the word coming in on Balrampur Chini Mills. But let's move on and talk about Tarsons Products. That's the stock also in focus today. Weak set of numbers that was reported by the company. Revenue down 20%. This is quarter-on-quarter basis. Clearly, there's pressure coming in, and we've seen this in the last few quarters as well. Profits of the company just at 4 crores versus 10 crores last quarter. 61% downtick there. While in terms of the EBITDA and operational performance, that's also seeing a decline. So EBITDA margins are down by around 650 basis point. 22.1% versus 28.6%. So yes, stock down 5.5% as of now. Almost near the day's lowest point is what Tarsons Products is trading at after a weak set of numbers reported by the company.
Alright, that's Tarsons Products in today's trade. Last stock that we were discussing on the show today. On that note, I'd like to thank everyone for joining us. Jinay, Arpit, as well as we had Ruchit in the previous segment. Thank you, gentlemen, for taking the time out and joining us. It's an end to all the stocks, but well, some important advice coming here. How to avoid the biggest errors while investing. In the latest episode of Masterclass with Utpal Sheth, the ace investor explains his insights on differentiated investing and how to avoid different types of errors. Let's go across and listen in.
If you have that awareness and equanimity, hopefully you will not make the type 1.5 error. But as I said, even if you do make the type 1.5 error, you will get a chance to rectify it.
That's the time you scale up.
Yeah. By making type 1.5 error is better than making type 1 error. Because in type 1 error, you completely miss the bus. In type 1.5 error, you do participate. You don't participate adequately at one point of time, but whenever you gain clarity and you have adequate focus, you will be able to rectify the type 1.5 error and scale up the weight in your portfolio, overcoming the reluctance or hesitation in your mind.
And to avoid type 2 errors, which is it could be governance, it could be change of trend, it could be technology, how does a terminal value investor really apply it? Because when you are looking at terminal value investing, you are looking at climbing the top of the Mount Everest starting from the base camp, which means you would like to give the company or the business liberty of time, perhaps benefit of market conditions and benefit of what's happening in terms of the general environment. How does one know that, look, I've committed in type 2 error, I need to rectify it?
Yeah. So type 2 error typically means that your judgment on the management has gone wrong.
Not business, only management.
Usually, right? Because governance is a management issue. Accounting or a fraud is a management issue, right? Much more than a business issue.
Okay, and with that, we're absolutely out of time on today's edition of Market Fatafat as well as this week's edition of Market Fatafat. So thank you so much from Sai, myself, our director Trevor, as well as Santosh and the team who put the show together.